The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Hi everyone, Basil Chapman here. Nice to hear a little Mozart overture before we get started. And I'm sitting in for Larry Pesavento. My pleasure to be here. My show is usually noon till 1 p.m. That is called the Tiger Technicians Hour. And my daily service is called the Opening Call, daily newsletter. Let's get to a couple of things. Let me just show you, for those of you who are new to my work, I try to identify the lowest low bar. We merely count each successive higher peak. I can go all the way to 7 peaks higher, alphabetize them sequentially. Peak A first, 1 penny above peak A, starts leg B, pulls back, makes a peak B, 1 penny above B, starts C, goes on to a D, and D is the 4th highest peak. That's where other things can happen. That's where you can get the greatest decline. That's where you could recycle to another 4 peaks higher, but that's also where you could just continue going, E, F, and G. There's never an H. So keep it as simple as possible, like the piano keyboard. You don't have an H. It's A, B, C, D, E, F, G. That's it. So what we're looking at here is, in the 1 minute chart, we went to a peak E, we've pulled back sharply. In the 2 minute E-mini chart, we've gone to a peak D, pull back sharply. The 5 minute chart shows you a beautiful example of a bunch of techniques in the Chapman wave methodology. Look at this. Let me just move it over to here. From the start of this particular move up, back at just before 1 o'clock this morning, that's Eastern time, at a low of 36.68.25, it starts peak A, B, C, D. Then there's a technique in the Chapman wave methodology called the Chapman wave instant restart, where if within 3 bars it starts a new higher peak, that could be called either E or A. And if it's an instant restart, there's a really good chance that it's going to go all the way to at least a D. Well, lo and behold, it went to a second D. Then it pulls back, starts another buy mode. And this is where the technique that I've developed over the years, where those people use the MACD, the moving average convergence divergence. Of course, Larry uses none of this. He's got a very straightforward, simple technique. MACD is pulling back. That says that everything should be declining. We've got other techniques that show you that if you keep holding the 9-period exponential moving average, you can go higher. Well, it goes to peak C, and then it pulls back, and then it double tops at exactly that height. Well, in the Chapman wave methodology, if the technique says that it's starting to pull back, or the techniques are about to fail, we call it a peak C1, CD. Why? Because all the on-balance volume said there should have been at least one more pop to at least 25 cents higher to make that D. It didn't, so peak C1, C2 takes the place of D. Pulls back sharply, starts a brand new ABCD in a technique that I developed where the left side number of bars equals the right side number of bars. And lo and behold, it goes to a D. It has what I call a Chapman wave inside wedge repellent zone. This little green dashed line, it says that there should be a test of the previous high, and it should be coming in at 9.05, but it came in at 8.55 and missed it by about 50 cents. Now it's pulling back after that peak D. All right, that's the technique in a nutshell, at least some of the technique. Well, lo and behold, we've got a peak D in the Dow from the close 3 days ago, 30,343. Another technique that I developed is where you're looking at what I call the Chapman wave inside track repellent zone. It could be a propellant zone. In this case, it's a repellent. Why? From November the 9th, there was a spike to 29,933. Well, lo and behold, the Dow closed yesterday 30,015. It's a month and a half, and it's barely gone anywhere. That's repellent zone. Look how perfect this repellent zone is. It's about 8 or 9, maybe 11 times that it's tested. It has not broken above the green line. So the Dow starts to trade at the 30,580, 30,630 level. That's a breakout. That turns this whole area into support. I think we're running out of steam. That's all I'm saying. So let's go. Now we can go to the futures. The YM made a peak. G, it's an alternate count, and we haven't gone above that yet. So we are up 78 points. That was a spectacular turnaround on Monday where the YM, the Dow futures, plummeted from a high the same night. It went from 30,333 down to 29,318. I mean, 1,000 points, and then it comes back strongly. So that is impressive. But unless there are new highs, impressive is not good enough. It's just saying there is buying support, and it's not breaking down, but it's not breaking out. That's really what I wanted to say. So here we got the futures in the Dow. Let's go to the futures in the S&P. We've got 37.24 round number high. That was Sunday night. The next morning, it plummets down to 35.86 round number low, spirals up, and it pulls back sharply. Yes, it says short there. So our only short position for my subscribers. We've got long positions, more long positions than we've had in ages. Some of them have had incredible gains. Trying to hold on to that. So we've got a short. It's almost as both protection, and I think that there is some kind of a short-term top in place right now. We'll know in the next few days. Just make it clear, if the low that was made in the futures last night of 36.51 is a round number is taken out and it starts to trade, you see where it says key level? This particular candle here is called the Chapman wave Roman candle, and the implication is at near the top. We saw this back in October of 2007 in the Dow. If there is a move where you've got just a fractional little wick and a huge pullback and then a close about a half to maybe 2/3 above the low, at any point within the next couple of days, if there is a trade in a shorter time frame that goes into halfway through the bottom wick and it starts to hold there for a certain period of time, in this case, I'd say about an hour and a half, 90 minutes, I said to subscribers, if there is a move to 36.47 at any stage in the next day or so, and it holds there intraday, there's a real good chance we're going to go all the way back down to 35.86. So far, it's holding very nicely. In fact, it's a nice little green candle here. All right, let's get through the numbers here. We're looking at the QQQ, which is the Index 100, trading up 23 cents at 309.99, made an all-time high of 311.98 just 3 days ago, dropped sharply below the 14-period moving average. The MACD is just flat. It's not great. It's flat, but okay. Stochastic's holding very nicely at 88%. We'll see if there's enough strength to get above 312. That'll be very impressive. I think it might even be next week that we have a sudden pop to get that leg D in the weekly chart. We'll see. Look at the IWM, which has been a real leader. One of the reasons why we've been long since 173.31 in the IWM is because my impression was that there was a rotation occurring back in October, November, and that was saying that there was a really good chance that the small caps could start to lead. And yeah, they've been leading very nicely. I'll be back in a moment because we want to look at gold. Gold is up $2. It's in that consolidation phase right here. Made a peak D in the weekly, did that sharp decline. I'll be back in a moment. Basil Chapter sitting with the one and only Barry Pesavento. Great what you see. I'll be back in another minute.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hi folks, this is Tom O'Brien. Do you have broken or unwanted jewelry, diamonds, watches, coins, silverware, and other collectibles that you would like to turn into cash? Tiger Precious Metals and Stones will pay fair market value. We make it easy to turn your precious metals that are sitting around in your house into cash. Call Andy now at 727-329-8245 and he will walk you through our safe and secure process. Andy has been in the business buying and selling precious metals for over 15 years. Call Andy now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So we're back. This is Basil Chapman sitting for Larry Pesavento. I'm the host of the Tiger Technicians Hour coming up at noon. I'll be there as well. And I'm also the author of the Opening Call Daily Newsletter. Look at this, 1874, up 3, up 4 now in gold. This is just very steadily moving up. In fact, you could even say that this is an inverse head and shoulders, but I still think it's part of the consolidation phase that's going on in gold. Look at that peak D. There have been 3 stages to the downside, little dreaded H. Oh, let me just talk about that for a moment. In my technique, there are just really 3, here we go. Not there. There are only 3 directional moves that I look at. Straight line up, straight line down. Cup formation, it could be a V-shaped formation, but you're going from one point down and then back to that point. What happens at that point is really important. Or the inverse, I call that, and that's red because if you go underneath, it's negative. This is the arch formation or inverted V. You can get a combination of 1 and 2 or 1 and 3. This is a combination of straight line down, 1, and the arch formation, 3. And it's red because it's called the dreaded H in my work. If it takes out the left side low, you can keep going down. And on the right side, it's the inverted Y or reverse Y. If it takes out that left side, it can go much higher. Well, look what we've got here. We've got the H pattern once. It goes to a lowercase m. I'm going to show you something very interesting in a short while. And here is the third. And this is the one that's most important because it went to a lower low, but it's within a channel. Look at this. You just take 2 straight lines, diagonal lines in this case, and look how perfectly it says at any point if there is a big move in gold and gold starts to trade at about 1923, 1926, that would be the first sign to say, hey, this is where where there is a change of direction from this lower lows and lower highs, and we could start to make higher highs and higher lows. You see the MACD's turned up, the stochastics turned up. The MACD's still flat, and that's saying to me there's still quite a lot of work to be done. And in the monthly chart, you made this huge cup formation going to a peak E, and that just suggests, look at this. Look at this beautiful left side, right side price time action. It took a few months more, and it broke above the left side high. Let me just show you this. There are. September of 2011. gold, this is a continuous contract, so the price will change, but the pattern and the labeling, that never changes. And it went to the equivalent of 21.24. It keeps getting smoothed out. And the high, most recent high was 2,100, just under it, right, 20,095. So this is a beautiful, look at this left side. You remember the pattern I just showed you in the 5-minute chart, left side, right side, price time match? Well, look at this, going to the low from that high of September, going to the low of doji, tiny doji candle low of December of 2015. In almost the same amount of time, it took a little longer, you went to that level that I was looking at as a left side, right side price time match. Actually, this should have been up here. I'm not sure why I ever moved it down. That's it. So it took a little longer, and it has in time, and it just missed it in price. I love this technique. You see, it has a Chapman wave inside wedge target repellent line. Good. Okay, so now let me show you a couple of things. We'll do silver. I want to do a bunch of things, and then we can go into the real market when the bell opens. We're looking at silver, which technically has a way better pattern than gold. I've been talking that since it made its high back in, with gold. This is a single leg A to the upside. That says that silver at some point should still go to a leg B in the monthly, high, then a leg C, and then a leg D. And it's an incredible chart unless silver at some point breaks under $18. And right now it's at $25.69. It's in this consolidation pattern, but it's a way better looking pattern than gold. Let's go to the dollar. The dollar DXY, there it is. Dollar is trading down 23 ticks at 90.42. We've been long since April of 2018, 90.07. Took a small piece off at 96.58. Saw it go all the way to 102.99. I spoke about it as being a peak E possibly coming up, and it could pull back. But my theory here has been it represents the United States economy. And that's really what I was looking at. We're still long, goes back almost everything, but the stuff that we've held on the UUP, which is the way we have it, is still in place. We're okay. We're still making a little bit of money. This is the pattern we're looking at, this declining. It's really like inverted cone formation coming to an apex here. This is really important. The low that was made in the 90 area just a couple of, less than a week ago, this is important. The dollar, if it even has to have a bounce, let alone a turnaround of major proportion, it has to close at least 2 weeks out of 3 above the 92.02 14-period exponential moving average. So, look, the MACD is still weak, but the histogram, the little vertical lines, is improving. Stochastics just turned positive in the weekly chart, but at 7%, that is so pathetic. The dollar, at some point, if it's going to have a really good bounce, has to get to the 92.74, 93.20 area, and then turn the whole area of 92 into support and keep bouncing. So, yeah, this could be a little bit of a bounce, but so far it's kind of pathetic. EUR USD made a very interesting top here, peak D top, but look, it's holding the 14-period moving average, and I really have to call this only a leg C in the weekly chart, so it should still go higher. Let's see, we've got to go to crude oil. Crude oil is trading peak F top, pulling back a little bit. It's been fabulous. I'd like to see the crude oil move higher. I want to see that's a good economic sign. I like to put it together with wood, which is, let me see if I can get this right now. As it's coming up, let me show you something interesting. So it'll take a second. It'll be a black background. What we really want to be looking at here today is the market able to hold a good gain? Because usually going into Christmas is usually a good part of the, a good week. So we'll have to watch this closely. Some of the stocks that we're looking at, especially the small cap stocks, are at either yearly highs or all-time highs that we own for my subscribers. And I'm looking at this and say, what a diverse market. So here's the interest rate. The 30-year is the white TYX. This is a weekly chart, made a peak E. If it starts to break, it's at 1686 is 1.68. If it starts to break into, on any weekly basis, there's a close above 1.823. That's going to be a breakout. And the 10-year, the brown is the TNX. If that starts to break out, and if the cyan 5-year starts to break out, the FVX, all of a sudden you're looking at interest rates having a pretty decent rally, and that's going to impact, as it has, the Philadelphia Housing Index, which made its peak E at 415.20, and it's holding very nicely, but it isn't breaking upside, but it isn't breaking down. But wood, the iShares Global Timber and Forestry ETF, is at all-time highs. It is looking fantastic. That's a good sign. If you put it together with high-grade copper, these are good signs. High-grade copper is pulling back from a peak D, but still holding near the recovery highs. In fact, it's multi-year highs that it made. You look at peak E way back in 2017. I think it was December. Pulls back all the way to 2 from the 350-ish area down to 2 and bouncing. So all of this really is a good sign for the economy. You wouldn't believe, if you're looking at these charts, that we're in a worldwide pandemic. Let's look at the TLT, because this is really important, because we were looking at bonds. So TLT is down $1.11 at 156. TLT goes under 154, yields go much higher. Up in the 160, that's a good sign, but that means the market might be pulling back. I'll be back for the opening of the market. Basil Chapman sitting in
Larry
for that.
Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman here. Let's just do this quickly. The Dow is up 132. This is in real time, 133 right now. And what we're looking at is, you see this trend line, this rising trend line. It went under it on Monday, and then it closed nicely above it. Yesterday it closed just under it, and today it is hugging that line, and it has moved higher. It is actually on the green 9-period exponential moving average. The close today and tomorrow are going to be really important for the weekly charts. We'll see what happens, because the weekly chart, look, you've had this resistance. It just hasn't been able to take out that resistance. The resistance now, in terms of trend lines, would say that if there was a move to 30,450, that would be not just impressive. That would be the sign that there's a chance that you're going to go to the weekly Chapman Wave inside track repellent zone, and that goes all the way up to the 30,870 area. Ooh. We'll see what happens. Day is young. Let's see. So a couple of things. I had a question. Let me just get you a couple of the questions that were sent to me now for those people who knew that I was doing the early show. So Mara, this is one that I saw go by on the for weeks and weeks and weeks. I keep looking at it saying, oh, this is really interesting. It could have huge moves. It's down 29 cents at 33 cents at 13.63. So the question is, Basil, could you look at Mara, crypto sector, and also fuel cell? Thanks. Happy holidays. All right. So what we're looking at here, I thought I'd notated this. Well, maybe not. Okay. So let me just do this quickly right now, because this was one that I was going to use. I have a sector in my opening call newsletter called, in the Traders Corner, it's called the Screamer section. And we get stocks that are single digits that have a chance to really scream higher. Intraday, 3%, 5%, sometimes we've had a couple that moved double digits. So this is one that does that. I think it's getting a little choppy. It's trading at 13.43 right now. Now it's down 63 cents. So I did this real quickly. I should do this. Let me just show you. So so I always have to go back to the lowest low. That's obvious. So this is, look, peak A, restarts A, B, C, D, A, B, C, D. Now it goes A, B, C, D. And now we've got a brand new A, B, C, D. Let's see, that's an A, B, C, D. And this spike that we've just got here is either a brand new B or it's the old F. So I'm going to say that at this particular point, I think there's a much greater risk. You're treated as a screamer, but I would just say to you, be careful, because it's in an area. If you see Bitcoin, I Marathon Patent Group Inc. Oh, that's what it's called. I always wondered what Mara was. Had a family member called Mara. That's why I always looked at the name. You know, I'm just going to say, let's be careful of that. Let's look at fuel cell instead. Fuel cell's a little different. It's gone to a leg C in the, we once owned this. We once had it at 881, had a tiny little gain. I haven't gotten back in. It's now trading at 12.05. This is a brand new move, and it's gone to a peak A, B. This is leg C. This can go a little higher. If you're in it, I'm going to say raise your stop on a part of your position to about the 10.99 level. If you're in lower down, if you're looking for a brand new buy, you've just got to close your eyes right now. You're buying it right now at 12.17. I would have a 25-cent stop. It's a 2% risk. And that's all. And it's a small position because it's a high-risk position. It's in leg C. It could pull back and then go to D. But that's the only way you can treat it. If you're using common sense, you'd say, you know what, it's already had the move. I'm going to wait for a decent entry point. But if you want to use a trader's lingo, you grab it at 12.24 that it was at, and you just ride it, and you put your stop, and you raise your stop, and then you have two positions. You have your core position, and then you raise the stop on a small position and say, if it goes to, I'm having a trading stop, look, it's already at 12.39. As we're talking, 12.40, 12.41. Going once, going twice, 12.45, 12.43. No, do I hit 12.43? No, 12.42 is the high. So what are we looking at here is you've got to treat it as a moving target. And therefore, you've got to use a technique that works beautifully with a moving target. You keep your core position. You have a trading stop on your, there's your 12.43. Good, okay. No, 12.45. Good. Going once, going twice. And you keep raising your stop so that one part of your position guarantees you a decent percentage gain. The other one, you can start to maneuver. You can even get back into this if you like it on a 15-minute chart. So that's what I'm saying. But if you're looking at it, as I say, if you're using, if if you're really a conservative investor, you don't look at these things. This is not your cup of tea or even your cup of coffee. So, but if you're a trader, like I would be doing if I was just doing this intraday, it's exactly what I'd be doing. Hey, within 3 minutes, you could be stopped out. Within 3 minutes, you could have two fantastic positions, your trading stop and your core position that you want to hold as long as possible. Hope that helps you. So the question I got was, what about Bitcoin? So Bitcoin is trading, is that up? Wow, up 310 at an all-time high, leg D. So let me just show you, we are in the Bitcoin for subscribers to my opening call. We've got short-term and long-term positions. Both of them are doing equally well. We got them on the same day. That was on the 14th of October. One was at 12.48. That was the long-term position. The other one was at 12.41. And it's trading right now at 30.73. We've taken two little bits off for really big gains, 74% and something else. But in the meantime, it's up huge, 140%. So the weekly charts, I'm pretty sure this is a leg B. I can pull back really sharply. I'm calling it a leg B, not a G. And the monthly chart, the all-time high was 38.71 in December of 2017 in the Bitcoin Investment Trust. It dropped a little. It dropped to 360. To me, that's pretty devastating. I call that crash material. That's not to say that the medium that you're using is in a crash, but the price is a crash. Then it runs up from 366 to $17, about $17 within 4 months, 5 months. And then it gives it all back. It goes down to 501 in March, making higher highs and now higher highs and higher lows. That's the definition of a bull phase. So this is very good. And it's in leg B, gray leg B, because it's under the previous all-time high of peak F at 38.71 in December. And it's in leg B. And I think it's a much more legitimate thing. I'm trying to figure out for investors how we can do this, because this is still an IPO. It's only, it's barely 3 years old. Not even 3 years old, 2.5 years old. So I want to have the risk. I want us to be able to say anything can happen to these things at any point. And how do we mitigate that risk? And that's what I'll be figuring out in the next few days. So in the meantime, we've raised our stop, but it's acting very nicely. I like this. But I think it's getting a little toppy. Like many things are starting to get a little toppy right here. Short term in the daily chart. So all I can say is that going to Bitcoin, the question is on Bitcoin. So I would just say to you, the whole area of 22 to 21, just be prepared that this is going to be revisited. When? I'm not sure, but absolutely it will be revisited. If you're not in and you say I'm risk averse, but I'm still prepared to look at something like a Bitcoin because it's becoming much more of a legitimate area of investment, then start to look for it in the 22 to 21 area. I'll be back in a moment. Basil Chapman saying for Larry Pesavento. Dow's up 183, S&P's up 16. We'll be right back.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar's worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi folks, this is Tom O'Brien. Are you looking to buy or sell gold, silver, platinum, coins, or bullion? We can help. At Tiger Precious Metals and Stones, we specialize in the buying and selling of gold, silver, as well as collectible U.S. and foreign coins. We not only buy your unwanted or broken jewelry, but you can trade that in for gold and silver coins too. Call Andy now at 727-329-8245 for a quote over the phone and to lock in the current market price. Call us now at 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Hi, folks. I had a question. Would I look at PAS, which is Pan American Silver? It's trading right now at 33.09. It's up 95 cents. So this is what I was talking about. You see what's happening as this is silver. And look how it's held very nicely, even though it's been consolidated since it made that weekly peak D high. Remember, fourth highest peak. That's where other things can happen. 40.11 back on the 7th, week of the 7th of August. Pulls back, makes lower lows, definition of a down move, lower lows and lower highs. But look at this. This is Chapman, is what we call a Chapman wave falling axe formation. Lower highs and much lower lows. And then it starts to make a U-turn. And it has the potential to make either a cup formation or a V-shaped formation. And what you want to then see is shorter term. You want to start to see higher highs and higher lows. Well, it's in the middle right here. And what I normally would do is you see this green line here. I make that green. I got on trade session. I've got some easy tools that I can use here. But you don't have to make it as fussy as this. You can even just print out the white background and do it yourself by hand. It's just easy enough. Just draw it. Look, there it is. So this is a Chapman Wave inside track repellent zone. If Pan American Silver, and on the daily basis, so far I'm calling this a peak E, but it's held quite nicely. It says that there's a good chance that it's going to consolidate, and I usually do this. It's a pattern of two fighting directional. They are. So what we've got here is this is a Chapman Wave inverted falling axe formation. Look at this. So let me show you the pattern. Let me show you the technique. Let's just do this right here very quickly. There you are. So there's a pattern that I developed years ago where the price runs up, and usually at a peak D, E, or F, there's a turnaround, and it starts to make lower highs and much lower lows. Then all of a sudden, it finds some kind of a base, and it turns around. It makes this cup formation, and then you get what I call a Chapman Wave one-to-one parallel extension. If it can break above this trend line, the declining trend line, that thick gray line, and then treat that as support and move higher and close maybe 2 bars out of 3 above that, nicely above that, then it should turn that into support. And you should be able to get a one-to-one. And the whole thing about this, it should be directionally and price-wise, time-wise, the same proportion to the upside. So this is what I would say to you right here. So this is the inversion. At any point, if I don't think it will, but if Pan American Silver, PAAS, closes underneath 28, you could have this reversal to the downside. So the two fighting patterns, you've got this cup formation. You've got the falling axe formation that says, hey, be careful, because if you don't break out, you're going to come back again. And it says if Pan American Silver in the next 3 weeks is able to trade on a closing basis any week above this high right here, the high that was made back on the week of the 6th of November of 37.29, there's a really good chance it's going to go higher and tackle the most recent high of the 7th of August of 40. What did I say? It was 40.11. That's the way to look at it. And that will really improve that peak D in the monthly. The monthly says it needs a little more time. The MACD is still very strong. Stochastics pulled back under 80% at 72%. I think there's still more time to be had with the gold stocks and silver stocks consolidating. I still think they're going to have a big move up, but I think it just needs time. Next question, I said, hi, Basil, is there a buy in Myrna, mRNA? mRNA, Myrna, of course. I think I said this a little while ago. I said that everyone looking at the COVID stocks and thinking, wow, they're going to have a spectacular year. I said, no, you got it all wrong. Once the government gets involved, it means that there's a really good chance that they can't gouge. Sorry, you never heard me say that. There's no chance for them to have a price elevation in their products because there's a cap. And that cap says, be really careful. And it made a peak. I got this as a peak C. I think it's an alternate count, C/E. That's really what I have to push here, E/C. Whoops, where's the E? E should be right here. There it is. At 178.50 on the 1st of December. I think it'll hold quite nicely because they're going to get good income. But that doesn't mean to say that it's a buy. Look at leg E, Moderna Inc., trading at 116.75, down 9 today. I think they are in for not a tough time, but I don't think they're in for a major move like they had. I mean, these are spectacular. So this is a stock that was trading. I told the story. I don't have time to say it now. I was somewhere back in, I think it was July, and I was working on my computer. I was working remotely. I was waiting for my wife, who was at just a doctor's office, and someone came up to me and said, "Oh, I've been watching you do this." This nurse, I think she was, and she said, is that stocks? I said, yeah, it's stocks. She says, I don't do anything in this, but my boyfriend and I, we decided to do something, and we got this stock, and I just immediately said to her, what would it be, something like Myrna, Moderna, something? Yes, she said, that's it. So it was at the time, I think it was at 50-something. Let's see, is that July? Let's go back, July. I'll go July. Wow, look at this. Yeah, July. Yeah, there it is. Back in the 55 area, right there. And I said, you know what? She said, what do you think? I said, how did you get to Robinhood or something? Yeah, Robinhood, she said. I said, you know what? Close your eyes and just keep it. But start to think when it comes to 2021 that you might want to get out of it. But she got it at 50-something. It hit 178. This is a novice. This is someone who knows nothing about stocks. I think this is in for a period of rest. Hope I helped you there. Next question was, was it here? It was an email. Can we have? I want you to look at the TLT a little closer. Yeah, TLT. Let me just put it this way: the TLT is down right now. It's down 185 at 155.91. This is the iShares 20-year Treasury bond. Remember, this is the left side is the daily. This is the weekly. This is the monthly. Peak D in the monthly, and there it is. The big digestive phase went all the way down to the 152 area from 179. I still think it has the dreaded H pattern. If it takes out, I have just said to subscribers, if you start to see the TLT closing under 154 at any point in the next few weeks, it says that yields are going higher, and that should impact the market. But there's something else, and 20 or more years ago, maybe 30 years ago, I don't know how long it is, I've been talking about the United States should see the Japanization of our bonds. And what did I mean by that? I meant that we will see bonds go down. Remember, bonds were way up. Some of us remember 17 and 18% yield mortgage, right? So in the 80s, well, it's been in a mega yield. TLT and bonds have been in a mega bull market. Yields have been in a mega bear market. But there is a chance that if the market pulls back, money invariably goes from the volatility of stocks. Volatility of stocks always means that it's going to they're going to be pulling back into the so-called safety of bonds. right? Fixed income. So that's what we would see. So there's a real mix. But all I'm saying is that this is the first time in all those years that I'm saying, is there a chance that at some point in 2021, yields actually start to go higher? Look, when you're looking at the commodities, wheat is huge up. The reason why we have the DB fund, that's the DB agricultural fund from way down, is that it looked like the commodities. Look at this wheat contract. Look at this leg C. It's about to go to leg D maybe in the monthly chart. Look at soybeans. Look at this incredible move. All recovery, all highs we're looking at. Corn, as we say in Boston.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. Just before we're about to wrap up, I will be doing Larry's show again tomorrow. And for those of you who won't be around, I wish you all a very Merry Christmas and certainly a Happy New Year. I'll be back here at noon today to do the show, and it's going to be an important 2 sessions because how the Dow is able, and we've been long the Dow starting from the low of March the 23rd. Let me just say for past, if you're looking at it on a short-term basis, I would nibble on it now, but I'd have a 1.5-point stop. And that would be starting to build position in it. And then this, I didn't finish that. So let me just go back here to the Dow. So the Dow right now, see, it's holding very nicely. If it can break into, this time it has to, the high, all-time high of 30,343. If there's a break into the 30,400 area, I think that'll be very good. But you don't want to see any news event that starts to break things down and all of a sudden see it underneath 29,700 at any point in the next 2 weeks. So that's that. But in the meantime, everything's holding very nicely. That IWM, which was leading before, is leading again. Is up 1.36. So as long as we're looking at leadership, fund managers always like to look at leadership. So that's very important. Also, those small cap stocks, I mean, we're very fortunate. We've got a whole bunch. Here's one of them, DDD. We've got at $8.21. It's trading right now at $12.48. I've got it in leg D. There's that alternate count. And it is, look, it's above the 200-period moving average in the weekly. And these small cap stocks are really nice. I mean, they're doing the job. It's like they were sitting there dormant, waiting. Now they've broken out. And that, to me, is a good sign for the economy. I think some of the bigger sectors are under pressure. Amazon, look at this. Amazon is stuck at 35.52 peak E in the weekly, peak D in the monthly. And right now it should be flying to all-time highs. So just remember, this is becoming much more selective. I wouldn't be listening to the news. In fact, I've tried my best to stop listening to the news as much as I can, or at least letting it impact me at all in terms of the market. But if the market, if the S&P, I'll make that as well, if the S&P, which is trading right now, up 18 at 37.05, 37.26 was the high at last 4 days ago. If it trades in the 37.30s at any point, that's good action. If it falls from here, that's at least a short-term problem. I'll be back at noon. Otherwise, tomorrow, have a wonderful day. And thank you, Larry, for the opportunity to sit in.